Hello and welcome to Token for Your Thoughts, the podcast where we sit down with the people behind the companies shaping Web3. I'm your host, Lindsey McConaghy, and today I'm joined by Ermin Sharich, co-founder of Aegis. Ermin, welcome to the show.
Thanks for having me. Excited, to participate in the podcast. And I also like your name of the podcast. If I was to start one, I would choose the same name.
Oh, thank you very much. Appreciate it. Okay, so today we are talking about all things stablecoins. Active stablecoin wallets increased from around 20 million in February 2024 to over 30 million in 2025 of February. That's a 53% growth. The circulation of stablecoins has grown from 128 billion in February 2024 to 225 billion a year later, which is a 63% increase. So to add a bit of context to all of this, last year in 2024, stablecoin transactions totaled 27.6 trillion, which surpassed the combined volumes of Visa and MasterCard by 7.7%. So stablecoins are really proving crypto's utility at a scale that is hard to ignore at this point. You are building YUSD, a Bitcoin-backed stablecoin, which we're going to get into and talk about. But first, as always, we're going to start by getting to know you a bit better and what led you to start Aegis. So let's take it back. What were your career aspirations growing up, and what were you interested in originally?
Yeah, during my school years, I always wanted to be an engineer and basically move towards towards that path. But just before I enrolled the university, I decided to go into the economics and finance, because I think it was kind of like opportunistic approach, because finance is a well-paid job. So I decided why not to try go into finance. So I did financial markets during my university, and that's when I first learned about Bitcoin and crypto in general. But I would say that at the beginning, I was a Charlie Munger, Warren Buffett type of minded person regarding crypto in general. So I wasn't a true believer in crypto.
Okay.
Because when you study finance, you learn about asset pricing and also how the capital markets work, and basically the traditional valuation models for the different asset classes, they don't work in crypto, because crypto is not an asset that generates profits or whatever. So it was kind of like hard to comprehend for me what the actual use case and the value of crypto is.
Okay, interesting. So how did you find out about Bitcoin and crypto at university?
Yeah, I think I read some articles in the news that Bitcoin grew 300%. I think it was the time, it was 2017 when there was an ICO boom, and also the super cycle of the Bitcoin. And when you read this kind of news, when the asset rises in price a couple of 100%, it obviously attracts your attention. And I started exploring more about Bitcoin and crypto, and it really caught my attention. But still, I couldn't understand what is the value behind it. And at the beginning, I thought it was just a huge Ponzi scheme. And when you listen to, and at that time, all of the general media, like if you listen to CNBC or other similar financial media, they were all talking about that Bitcoin as a Ponzi scheme, and that it's bubble. And I think it influenced my vision of the crypto as well. But also during that time, I got my friend, a very close friend of mine. He was he joined some crypto company. I didn't know anything about it, but he basically approached me and asked me if I would like to join the company and basically help with building a consulting arm of that company, kind of like an arm that would do consulting and research in crypto and help companies on board with, with crypto economy. So yeah, I think that was my first experience with crypto. And afterwards, I basically stayed in crypto for more than 5 years already.
Okay. So was that your first job after university? When your friend approached you about the crypto company, or were you in another field before that?
Before that, I was in general finance. I was at KPMG, basically an audit firm, doing first audits, financial audits of the clients, and then I moved to M&A department of the same company, and we were doing some M&A deals across TMT sector and working some real estate developers. So kind of like it was a traditional financial job in a big financial conglomerate. So I think I did that for a couple of years, and at the end it became a little bit boring, I would say. That's why I decided to make a move into something new, something that I didn't believe in at that time, but I don't regret making this move.
Okay. Yeah, because I was going to say, so you're at university, you've come across Bitcoin, you've learned about cryptocurrency, but you're not convinced. You've gone on to get, a pretty good job at KPMG. And that was what I was thinking. So how did we go from that to then taking a jump, leaving this corporate world, going into crypto? And it sounds like you still weren't convinced when you actually went in. But yeah, you said you were just a bit bored, you're looking for new challenges. Anything else you think that made you take the jump?
I thought to myself, like, if I'm not a believer in crypto, although I, tried to do as much research as I could, I thought that it's better to take a look at crypto in general from another angle and basically going deeper into this industry by taking this job. And also another aspect of that was that they offered me a co-founding role in this department. Obviously, like the brand and the company was a very huge brand in crypto. And this was just a new department that we were starting. And it was also at the intersection between Web2 and Web3, because it's a classic consulting business that we were starting, but in crypto. So I thought to myself, like, obviously at KPMG, I was also doing some kind of consulting work when we were not doing these M&A transactions. And I thought, why not try to do similar job, but in crypto? And through that, I could learn more about crypto and see whether it's a scam or not. And also, starts a little bit more exciting job, because I was basically in the founding team of this new department under this big brand.
Okay, yeah, that makes sense. So different in the sense that it was crypto, but similar in the consulting aspect. And how was that? How was it going from working for a big corporation to being a co-founder at a crypto startup? What was that like? Was it a bit of a shock, or how did it go?
It was definitely challenging because at the beginning the team was very small. We had some clients that we worked with, and kind of like we were doing all the things by ourselves. And I think that's when I truly became aware of what it's like to be a founder, because when you work for a company, uh, especially for a big conglomerate like KPMG, you just person that does the tasks, right? So you have a management who are talking to the clients, who are basically making all of these contracts, and they just delegate the work for regular like managers and so on. But in the founding role, you need to do everything yourself. So like delivering the work, talking to clients, finding new clients, and also keeping everything in place so that you basically stay profitable, because this is kind of like a department under a big brand. And obviously we had certain key KPIs that we needed to keep track of. And kind of like very challenging stuff, but we managed to grow it to 20 plus people in the team during the 3 years that I was there. And we did some amazing projects within crypto. I got acquainted with, I think, major brands in crypto, different DeFi protocols, different layer ones, layer twos. So I basically knew the industry from down to top. So basically everything that was connected to crypto or was in the crypto ecosystem, we knew much everything about it.
Nice. Great. So it's kind of a crash course into everything, that it sounds like it went really well. So how did you get from there to then starting Aegis? What was the genesis behind the company?
Yeah, I would say the genesis of Aegis is, so I co-founded it with Riverside. Riverside is a major market maker in the crypto space. So they basically do some high frequency trading, and they had this idea of making a stable coin that would be, fully crypto native, totally independent from the fiat banking world, because you have a lot of stable coins in the space that are fiat backed. So essentially, they are not truly crypto. They have collateral, and their assets are kept in traditional banks. And in that way, you are still exposed to the TradFi world, right? So we had this idea of creating a stable coin that would stay within crypto ecosystem and would be completely independent from any third-party risk in the fiat world or even in the crypto world. So that's why we decided to create YUSD. And also we wanted to create a product that would deliver some yield to the users, so that you're just not holding your cash idle, but you also have some yield generated behind it, and you basically benefit from it as well.
Yeah, that makes sense. Having it backed by Bitcoin and independent of fiat. And then can you also tell us about the transparency and how that differs from other stable coins as well in terms of reporting and the reserves?
Mm-hmm. Yeah, so essentially, but our core mechanic is that we are a delta neutral stablecoin. Essentially, we have the collateral in place, but we in Bitcoin, but we hedge it with perpetual shorts. So essentially, it's like a financial instrument that is available on the different crypto exchanges, and we use it to basically create a position that is valued at zero. So in that way, we keep the stability and peg to US dollar of our stablecoin. So basically, if we hold if we held just Bitcoin, the volatility of the stablecoin would be, we couldn't create a stablecoin. So that's why we needed to create a mechanic that would allow us to stay, pegged to US dollar 1-to-1. And that's why we created the delta neutral stablecoin. So in terms of transparency, we keep all of our collateral and assets of the clients within custodians. So I think if you look at in crypto in general, the custodians have the most secure technology right now to keep the assets safe. And also, on top of that, we never move the collateral to the exchanges itself. So we trade only through Clearloop or some other off-exchange settlement solutions that allow you to open the positions on the exchanges, so like trade on the exchanges, without moving the collateral to the exchanges. So in that way, we are fully protected, and the assets of the stablecoin are also protected. At any time, anyone can look at our current positions and also the collateral in the custodian. Everything is available for our transparency dashboard on the app. So we have a web app that you can access. It's basically app.aegis.im. And through that dashboard, you can see everything in regards to the stable, our collateral, our current TBL, the current yield that we are generating, and also the reserves. On top of that, we also have insurance pool that basically protects us from the events. And for example, we could potentially incur some losses, and we basically are planning these losses with this insurance pool that we have.
Wow. Awesome. Yeah, there's a lot there then. I think it's really fantastic that there is that transparency so users can see what the situation is with the reserve. You're obviously taking security very seriously, and then just the completely different approach by being backed with Bitcoin. I guess, how did you decide upon the makeup of YUSD? Was it things that you were experiencing in the stablecoin market that you wanted to see? We've obviously had a big failure of a stablecoin, in the past. Did that inform anything of how you wanted to move forward and create YUSD?
Yeah, that's a good question. I think, we all saw the failure of Terra Luna, for example, a couple of years ago, and we wanted to create something that would, and also we saw different DPEGs of centralized stablecoins like USDC or USDT, and everything was because of one thing, Terra Luna, because obviously it was let's say Ponzi scheme from the beginning, so it wasn't sustainable in the long term, the way they designed the stablecoin. And if we're talking about centralized stablecoins, it's obviously the risk of the assets freeze or seizure. So when Silicon Valley Bank collapsed, obviously Circle capped some of their collateral and assets in that bank. And when this bank collapsed, obviously USDC back because of concerns from the investors and the users that Circle could not redeem all of their stablecoin back to US dollar. So we decided to take a step forward and create something that would be completely independent from this third-party risk. So you basically don't need to trust that. So collateral is kept in a custodian that is a Swiss-based trust, and basically anyone let's imagine that, for example, like Copper fails, which is our custodian, or for example Aegis fails, assets still will be within this trust, and anybody can access them, no matter what. So that design allows us to protect users 100%, and also it allows us to build trust in the space and deliver a product that could be used by anyone. So you can essentially, like, Aegis allows you to be your own bank, right? So you buy the stable coin, you earn some yield on top of it. So it works the same as the bank deposit. So you just buy and hold it, and the yield accrues seamlessly, and you are protected at all times. anything can happen to Aegis or to custodian, but you will still be able to access your funds. So, looking at the market, what others were doing or are doing, we decided, to make this design will allow you to be your own and make protected at all costs and anything.
Yeah, that's very reassuring. And there's definitely something to be said about being a first mover, first move advantage, but coming in later, having seen like issues, problems, failure, it's great actually to come in and then build a product that has real solutions to those things. And you can take in learnings of the past and build something really robust. So it's really interesting seeing the features that you've developed. And you also have a DAO. You're governed by a DAO. Can you tell us a bit about what community-driven decisions are happening at Aegis?
Yeah, so I would say our long-term goal is to convert to DAO. For now, we have the DAO mechanics and everything planned, but we haven't converted fully into DAO. So there are some parts that are still, implemented in a centralized way. So, for example, still the founding team, we kind of like make the decisions in terms of integrations and what exchange to trade on, what custodians to use for keeping the collateral. But in the future, all of this will be decided by the DAO, like which new exchanges to integrate, which DeFi protocols to be listed on, and so which exchanges to do the listing of stablecoin or of our governance token. So everything will be governed by DAO when we distribute the governance token. So we have stablecoin, which is the core asset of Aegis. And also we'll have this governance token that will be used also to incentivize users to participate in the project. And basically by holding the AG token, it will be called AG. By holding the AG token, you will be able to participate in the governance and basically decide what will happen with the project in the future. I think the same way many projects in Web3 operate, but we want to build a true DAO, because in most of the cases, if you look at some other projects in the Web3, some certain groups of people, they take control over the DAO, and basically decisions are not that decentralized. We want to eliminate that and to distribute the tokens of the governance of the DAO in a fair way, so that nobody controls a significant portion of the tokens, basically governance rights in the DAO.
Nice. Yeah, and that's definitely an important value add and a big one for building trust. And it's good to hear that, that you want it to be truly decentralized. And so users can have a say in the future and participate. So how has it been, this co-founder journey for you, building Aegis, and how did it compare to your first previous experience building a company in the industry?
I would say when you're building like a consulting business, it's much easier to do because it's a proven business model in the Web2 world. You just need to replicate it in the Web3 and kind of like do the brand positioning and value in a certain way that the companies understand what you're trying to bring to them. And it's much easier to do. And obviously everybody understands. So a lot of companies that are in Web2 and want to move to Web3, they already know that they need to find some partner in Web3, which is a consulting firm that could help them basically on board into Web3 world. And we were doing this thing, and it was easier to sell it. When you're building a stable coin, especially in the time when everybody's trying to build a stable coin, as you mentioned at the beginning, like the industry has been growing, significantly, and the market cap of the stable coin stable coins is surging significantly, and there is a lot of competition, huge competition. Everybody tries to build different versions of the stable coin, like RWA back or delta neutral, like we are, or some other versions of the stable coin. There are a lot of designs and everything. So it's much harder to build first to build this product, because you need to have actual technology behind it and basically everything in place to sell it. And the second thing you need to, so our core KPI right now is the total value locked in the stable. That's essentially how many stable coins are minted and are in the market. And I think growing this number and getting more people involved, that's the hardest part, because you need to, to be positioned to sell it properly and to tell everyone clearly why they need to buy YUSD or mint YUSD, why we are different from like other stablecoins. And what we do is we say that we are truly crypto native stablecoin and completely independent from all of these risks that I already mentioned. But when there is some positive news in the market, when the market is bullish, obviously nobody thinks about those risks that we are eliminating. Reliance on centralized stable coins. But I think slowly but surely, the market starts to understand those risks, and I think we are well positioned to accommodate this demand when it comes to a more risk-averse type of stable coin.
Absolutely. And in terms of, growing that TVL number and growing your user base, do you have any kind of particular user in mind, like a profile that you're targeting? Are you targeting any specific markets? What does that look like?
I think we are a good product for different family offices that have exposure to crypto, also hedge funds that do trading and market making in the space. And also there are lots of capital allocators and funds in crypto that are looking for this DeFi yield, right? DeFi focused funds. So we are targeting mainly them at the beginning, but also we want to target retail and like regular users that are trying to find a product in crypto with minimal risks, right? But with some kind of yield, so that they can earn something on top of their holdings in crypto, or when they want to diversify a bit from exposure just to some meme coins or some other tokens that they are buying, they can allocate portion of their holdings to our stablecoin, basically still earn some yield, but their money is like safe and sound. So it's in the form of stablecoin, which is back to $2. And in the future, our long-term plan, I would say, is to tokenize some other strategies, because there are a lot of things that you can tokenize and make a stable coin on top of them. And idea is to become an infrastructure player that would, provide this infrastructure for tokenization of different strategy and providing more stable coin products for the market. Yeah, but also for the retail, so that's kind of like for B2B users, and for B2C part, I would say the end goal of every stable coin is to become a form of payment, so that you can actually spend it. So yeah, I think that's in regards to the B2C plans we have.
Okay. Yeah, there's a lot of opportunity. Has that been challenging in a way, that there are so many different use cases or so many different directions you can go with a stable coin? Obviously, it's exploded in the last year. How have you tackled that, like deciding what to focus on, who to focus on within this market?
Yeah, that's definitely challenging, which path to take first. But I think we kind of like agreed internally and also looked at the market. We've agreed on a certain go-to-market plan. So first we would target the crypto native groups, this hedge funds, DeFi native funds, and also family offices that have exposure to crypto, and start with the DeFi, because the core, I think, utility of a stablecoin right now in crypto and DeFi is becoming a collateral in the lending markets. Obviously, I think DeFi for years tried to develop a friendly user experience, but it still, lacks that, because if you put a regular Web2 user into crypto, they would enter through centralized exchanges, because the user experience there is much easier, and they are used to it because it's similar to the Web2 financial apps. But in DeFi, it's very hard to enter for a regular user that is not used to crypto, or just bought crypto, or just entered the crypto space. So we want to make this experience very smooth for new users, and that's why we're starting with DeFi, trying to offer a very simple earn product there. So where you just buy this asset and you can earn a DeFi yield with no, basically seamlessly, with no additional steps and requirements.
Yeah, lowering the barrier of entry there. Yeah, it's good to hear. And in terms of going back to building Aegis, for our listeners who are also building companies in Web3, what's it been like building in this regulatory environment of it being obviously changing, it being uncertain? How have you approached that? We see that you have been compliant from day one. What has that journey looked like? In terms of getting compliance, and then just how you move forward and just build in an uncertain landscape like this.
I think the regulation, especially for stablecoin products, is very tough right now. Although it's getting better. A lot of regulatory uncertainties are getting fixed and resolved. So I think our core strategy there is to comply with all the regulations in different markets. So, for example, in the US, there will be like a stablecoin act soon. So we will have more, we'll understand clearly what should be done in order to offer like stablecoin product in the US market. Obviously, for now, we are not targeting US at all, because we don't have licenses and regulation there, but we will pursue that once we have more clarity on that. Also, we will start license applications in Europe because of the MiCA regulation. In other markets, we try to be compliant as well. So I think there is a long-term strategy on how to do that. And the core here is to pursue as many licenses as we can and be compliant in every region where we offer our product. And obviously for now, we are a bit limited in terms of that. So we are offered only in the markets where we are compliant. We are compliant, and we start as a decentralized or DeFi product, right? Which can be accessed through some DeFi apps and decentralized wallets and so on. So it's kind of like making things a bit easier. But obviously, if we want to move into a very regulated part, which is like centralized exchanges and centralized wallets, we definitely need all of these licenses, and we already started pursuing some. So I think it's going well. Obviously, it's tough, but it's going well.
Okay, great to hear. What would you say has been the biggest challenge in building Aegis so far?
Uh, I would say the core challenge is delivering the product, because obviously you can do great marketing, you can do great business development and everything, but if you don't have good product in place, nothing of that would work. So we spent a lot of time thinking about the product, designing it, and actually building it. And we spent the last 6 months doing that, and we just launched 3 weeks ago. And I think it was a great start. We already have around 9 million in the TVL, and it's growing every week. So hopefully we will be able to hit at least 100 million TVL mark very soon. And that will open up a lot of doors for us and benefit the users. And eventually we will grow to much bigger numbers and continue to take the market share in the stablecoin space.
Yeah, amazing. Congrats on that. And in terms of market share, and you've mentioned that there are a lot of competitors and other stablecoins popping up. What do you see being the future of the stablecoin market? Do you see there being lots of different players, or do you see consolidation and there being, just a few major players? Let's, I know it's hard. Let's get your crystal ball out, but what would you say of how you see things going for that?
I think the stablecoin market will definitely kind of like different players will merge, or kind of like deliver the products that would use both, or like kind of like the basket of different stablecoins and create a new stablecoin on top of that. Because I don't think that all of the projects will survive. Because when there is a hype in the market and investors pouring money into new projects, supporting them, investment, so on, a lot of projects that don't have the real value behind them, merge, and that's kind of like also the problem for the stablecoin markets right now. But in the future, I think there will be some major players, a couple of major players that will stay, but most of them will just merge with other projects that had some significant traction, or that had good products behind them. And but I believe that the stablecoin market will be more an infrastructure play, so that anybody could come to some platform and basically tokenize something and make stablecoin on top of that, and essentially have this kind of like product, the stablecoin product, based on some kind of like idea of how to tokenize something. So yeah, I think that's what also some big Wall Street firms are betting on, like the tokenization and the tokenization of everything. So I believe in that as well. But on the stablecoin side, so tokenize some strategy that has yield and create a stablecoin on top of it. Yeah, obviously there are a lot of risks involved in this. So I think there's also what we are trying to eliminate, like creating a risk-proof system and design that wouldn't have any of those risks.
All right, yeah, we'll watch the space to see how it evolves. Can you share any, like, if there was, what would you say was your biggest learning, or if there was a big mistake you made as you've been building Aegis that you can share with with our listeners, founders building in the space that might find it useful?
I think the biggest learning of this is that you need to push harder when you have some kind of like idea, and everybody tells you like, oh, it's not interesting. There is a lot of things already happening in the market and similar things happening, like or there is already a big player that wouldn't allow you to grow or to build, to enter the market. You just need to push and go forward and build a product and go to market with that. And you need to let the market decide what will happen with that, not some other, maybe investors or institutional capital allocators. So yeah, you just need to push forward and everything will be fine if there is a product market fit.
Yes. Yeah, I think that's great advice. There are always going to be naysayers. And I love stories where people share, well, I got however many, this many hundred no's, but, you just need a few yeses and you can move forward and you can be successful. So I think that's always a great reminder because, there are always going to be people who are skeptical and don't believe. That's obviously where you started your journey in crypto. Like, no, this is a Ponzi scheme. So as evidence from that, it's really great advice to bear in mind. So to wrap up here, what are your goals for Aegis and YUSD? You've mentioned that you're working on, growing your TVL and that you mentioned being a tokenized, infrastructure layer. What are you working on, say, for this year? Where do you hope to see USD going?
Yeah, I think this year our core goal is to excel this product, the first product that we have, a delta neutral stablecoin backed by BTC, and we will try to do everything to grow the TVL to a significant number. I think our goal is to surpass at least 300-400 million in TVL. And also we are kind of like launching a points program soon that will allow, retail users to participate in the project as well. And basically farm points that will be exchanged into the governance tokens. And basically this community, we want to build a community that will eventually transform into DAO and govern the protocol. So I would say for this year, the core goal is to build this core product, drive as much TVL as we can, and deliver the yield for the users. So I think the core value proposition of Aegis is that we are also a yield-bearing stablecoin, and we allow everyone to park their cash and money in a safe place and earn money, essentially. So yeah.
Awesome. Yeah, it sounds like a really great offering. Ermin, this has been a really fantastic conversation. It's been so great hearing about your founder story and everything Aegis is doing and more about YUSDC. Seems like you guys have really come into the space, solving a lot of the problems and offering a lot of value to users. So we'll leave details of how everyone can connect with you and find out more about Aegis and YUSD in the show notes. Thanks again for coming on the show, Ermin.
Thank you. It's been a pleasure.
Wonderful. Okay, so that's it for today's episode of Token for Your Thoughts. If you enjoyed this conversation, be sure to follow the podcast and stay tuned for more interviews with the people building Web3. We'll see you on the next episode.